Hey guys, William Saunders here coming to you from sunny Florida, and I wanted to go ahead and shoot this quick segment of one of my market hacks, okay? Because I've been getting a ton of requests in regards to how I'm able to do what I do in trading, and in all honesty, I mean, it's really not that hard. You guys just really have to keep it simple. So most of the times we have the same tools. You guys are just really unaware of how to seriously operate them to its full potential. So I'll go ahead and give the example of, the difference between how I use Stochastics and how I've taught some of my students on how to use Stochastic compared to my trading colleagues that I associate with on a day-to-day basis, okay? Now, keep in mind, guys, trading is really simple. Stop overcomplicated. I think the most complicated thing in regards to trading, realistically speaking, is money management, okay? So not risk management, it's actually money management, because that's when it becomes a little bit of a more mathematical formula type of thing, unless you guys want to get into the whole Da Vinci Code of Fibonacci sequences and all that stuff. I mean, it's not really that complex. So for starters, what you guys want to do is always keep in mind, where do you want to get in? Second thing is, where do you want to get out? What is the risk? Is the profit actually worth the risk? And what can you leverage? Okay, so there's so many things inside the trading industry that you can leverage. That can be, just knowing specific times, knowing specific actions, leverage Excel, and just any advantage that you can have over the market that other traders don't. So this is why I want to give you guys something that you can leverage, which is one of my stochastic hackings, all right? Now keep in mind, I'm going to put you on the basis of this path, but I'm not going to sit there and do all of the work for you guys. So there's some things I will like to point out so that you guys can pretty much go and do your own research, for the simple fact of I've had some years of trial and error and experience with this. I'm not going to sit there and just hand it to you on a free platter, okay? And this way I can separate the lazy traders from the cultural traders. So just take this as a prerequisite to working with me sometime in the near future. So let's jump right into it, guys. Put your money away, don't need that stuff. Not even looking to grab your emails, just take the content for what it is. Follow me and keep me updated with your results, all right? So here is Euro USD 1 hour time frame, okay? Now, the difference that I like to use stochastics, I'll show you a couple variations of them. So this is just a traditional stochastic oscillator. As we can see, my parameters is just slightly adjusted. So I do like a 15, 5, 5, but it's really simple, fixed, 0, 100, low to high. Here's the colors that I pretty much choose, but I use this entirely different. So within the stochastics itself, I like to do what is known as a looping sequence. So it's kind of like a counting phase, okay? So that's the first thing that I would actually like to leverage in the event that I'm looking to take some trades. So most of you guys are just familiar with the simple fact that it's overbought or it's sold, okay? Which is perfectly fine if that works for you. I mean, go ahead, continue to work with it. I, on the other hand, teach my students a little bit differently. So what I do is have them going into a counting sequence based on loops within a stochastics, okay? So once you're either overbought or undersold, then that's when the counting sequence would actually start, all right? And what we do is we can look to take our entries based on every odd number, okay? So just as a really quick, easy example, as we can see, it crosses and breaches over, so now it's overbought. So the first count is going to be 1, 2, and 3. So that's your third loop, and you're going to look to take your entries there for your sell trades, okay? Now the thing about it is that this can go all the way back. It's always going to be a odd loop, and your popular ones are going to be 3, 5, 7. Depending on how far back you go, it's going to be 9, possibly even 11, okay? So this is something that's within the stochastics itself that many traders are unaware of. So you may think that, you've taken an entry, you got faked out and everything like that. That's just not the case, okay? So you just got to look to take the next position, all right? So something else that I'll tell you guys to kind of look into is that when you're overbought, there's a certain amount of candles that's actually held within this range. Same thing goes with being undersold, okay? So I'm not going to give that answer to you guys. So this is when you guys got to do your homework. You got to go pull out your charts and everything like that and get the average candles that's actually held within that range, get the minimum candles that you've seen in there, and also the maximum. So that will give you more leverage over the market, okay? And let me go ahead and pull this chart just slightly back, and we're just going to go with the easy ones. All right, so here we got your first breach down to here. So you got your first cross, second, third, and that's when you're looking to actually take your entry somewhere right around there. All right, now keep in mind that you're gonna have these things that happen, so depending on if you guys are using a tight stop or you're waiting for another entry, I mean, that's all entirely up to you, and that's where more leverage comes in later on. Okay, so you guys got to be able to understand your risk to reward factor is going to be, so 1 to 1, a 1 to 2, 1 to 3, 1 to 5. That's more of your own homework that you can do in your own time. Okay, but if you guys are definitely coachable, then you can talk to me a little bit later on. So let's continue to go back. So let's start with one that's a little bit longer. All right, now you're going to get familiar with some of them that you can cancel out. Like you can cancel that out because it didn't cross or something like that, or you can count that as well, but for the sake of this I won't get too much into that. So we're going to talk about 1, 2, 3, so that's the third. Okay, that's when you look to take a buy somewhere right around there because it's been low, pulled down just a tad bit, and you know, small profit, so that's still 3. Let's talk about 4, 5. Okay, so that's your other entry because that's the odd number of 5. Now let's talk about 6, cancel that out. 7, so that's your another entry of a buy. 8, 9, that's your another entry of a buy. We can go through here. 10, 11, odd number again to buy. 12, cancel out. 13, 14, 15, 16, 17, 18, 19, 20, 21. Okay, so you see how all of these odd sequences all the way down the line is going to give you entries where you can actually buy and have those trades coming out. Okay, so I mean, that's pretty much just on that. You guys, it just really starts when you actually have it breaching towards this level, and the sell side would be pretty much the same. So let's go ahead and cover a more simple one. Okay, so you got this breaches over, count 1, 2, 3, so that's when you're looking to get in that sell one. Okay, and these are just the more simple ones. 1, 2, 3, so that's your third. 4th, that's your 5th. 6th, 7th, 8th, 9th. It doesn't matter how far you go back, it's always going to be in sequence of your odd loop depending on the position that you're going. So if you're going down, it's going to be from there. If you're going up, it's going to balance out to an odd number, you know, always. So your much more easier ones would just be starting off with a new breach and then staying at 3, 5, and no longer going past 7. So this is, let's say, a new breach, go through there and leave that out the way. And let's see, here's a new one that's pretty clean. So just came in 1, 2, 3, 4, 5. So looking to take your sell entries from there. All right, so as we said, step 1, where do you want to get in? Okay, so you guys kind of got an idea of where you want to get in based on the looping sequence of the odd phases. Okay, the other portion is, where do you want to get out? Now that can just be a few different things in regards to if you guys want to just get out at the nearest support level. If you guys are leveraging, let's say, a 1-to-1 type of thing, risk to reward, that will give you an idea of where you want to get out and everything like that. And overall, I mean, you just got to identify what you're risking to make that trade and just continue the process. Okay, one trade at a time, that's really what it comes down to. It's not so much in regards to keeping it complicated. Now let's talk about another different setup that I have on these other charts. So here's a little bit different. Okay, this is the indicator tool that we actually use for alerts in regards to the looping and crossing sequences. Now this one, we change the ranges to this setting. Okay, so 100, 10, and 15. All right, and when you have the alerts here, it's going to give you pretty much every time it crosses. So that's why you see like these hollow arrows that's coming here. But check this out, this is a daily time frame. Okay, so you get your alert that you have a cross that comes through here, this thing paints out and the market drops down. All right, so I mean, even with something as simple as this, and we're not throwing 10 million indicators up here or anything like that, you can clearly see signs when your Stochastics does a pretty decent job of actually just taking entries and controlling the market direction. And I'm pretty sure there's going to be some times where it may chop out a little, but as long as you guys are actually using it, you know, properly in regards to risk to reward, money management, and you're just really keeping it simple, you guys are not going to have any issues so much to where it's devastating to your trading account. Okay, so this is GBP USD, and even with this being said, we just seen it breach. Let's do the same thing. So 1, 2, 3. So you can just wait that same setup, third loop, and take your sell anywhere from the crossing of this. I mean, this is where it really alerted out, but I mean, you could have waited until it officially crossed and then taken a sell trade all the way down. All right, so it's really really simple. So the looping sequence is extremely powerful. Let's take a look at this is going to be gold right now. And we have the same setup, so we can see with gold, alert goes out right there for the crossings when you have less of the noise that's going on. So you can just see these are pretty much entry areas that's going on right there, and we still have it kind of trapped through this whole thing. And I mean, it's very, very simple, guys. That's just kind of what it is. Take a look at the oil right now. So this is crude WTI, and you have the same function with these setups here. And let's take a look. So we got 1, 2, 3, third time, 4th, 5th time, right around there, 6th, 7th, 8th, 9th, 10th, 11th. So seriously, you can just go back as far as that, or just simply just wait until you get the alert that comes out there, decide when to actually get in. Okay, so I mean, that's pretty much it, guys. I just hope this would give you a starting point on just understanding and really keeping your trading simple. Okay, so it's something that's like this, you know, stochastic oscillator that you guys can leverage. It's already available to you guys, and I mean, you can use it totally in a different way, and there's a lot of different things in regards to that. For instance, like the Heikin candles that I have on here, which is, you know, something that I use totally completely different for everything from there. And as I stated, just as a quick recap, there is certain times when you guys are overexposed that candles can meet the volume, and different time frames will do different requirements and everything like that. So I recommend doing it based on the bar, which I can tell you most are anywhere from 10 to 12 on average, just as a quick recap, and upwards of right around 18 depending on the time frame, depending on the asset and everything like that. So you guys gotta really get in and kind of do your own due diligence and everything just to kind of get it. And even if you don't want to, I mean, just keep it very, very simple. Wait for your first entry breaches, as we can see down to here. Count your loops out, so 1, 2, 3, then look to take the trade. Okay, so if you guys are interested in getting the alert that actually goes out that I'm using with the system here, I mean, it's perfectly fine. I give that out to you guys pretty much for free, and as a bonus, I'll throw in my other indicator package that I did sometime last year. It was like 1,000 indicators that I've tested and everything like that. Okay, so only then would I recommend you guys to actually put in your email somewhere in the form here, and I can get that out to you guys. Okay, but other than that, I mean, just take the content, apply it, post some feedback, comment, and I can pretty much clear up any stationary questions that I can when I have the time. All right, but keep in mind, I'm also not here to help everyone. Okay, this is not about taking you guys money and everything like that. I can do that from the markets. What I'm really here for is to create success stories. Okay, so if you guys are coachable, if you're looking to really take your trading career serious, and you have 3 to 12 months of dedicated time to learn, to practice, to work with me directly, then I would definitely recommend getting in contact with me later on to see what I can do for you. Okay, so I wish you guys much success, and of course, happy trading. Hey traders, William here, and I got 3 important questions for you. Number 1, do you have a profitable trading coach or mentor? Number 2, are you getting 50 to 500 pips per day? And number 3, are you satisfied with your trading results? If you can answer 2 out of 3 of the questions with an yes, then congratulations, my friend. But if not, then we're about to change the game for you. And it doesn't matter if you guys are trading binary options, forex, or futures, because we can do it all and we have it all. Top of the line trading signals, monthly group shares, and complete market domination. Check out our free video course series and our daily trade analysis to see for yourselves.